Ladies and gentlemen, boys and girls, let's get straight to it on this lovely Friday. It is April 27th, 2018. So, I have finally recovered from parabolic paralysis, and that's a term I coined when something goes parabolic. What parabolic means is it goes um, on a state of heightened, accelerated um, growth continuously. So, what happened yesterday had just I couldn't even forecast what was coming because um, my brain was overwhelmed by what happened. Now I have a solution to parabolic paralysis that I did not follow, called called um, realize, analyze, react. That's my three simple stage solution for the good old parabolic paralysis. And what that means is you realize you have parabolic paralysis. Um, so that means you're what that term means though, parabolic paralysis means paralysis is you're you're frozen. So you're either afraid of, jumping in too late, or you're afraid of something. And you're very cautious and you're paralyzed because you don't know what's going on. So what you have to do is realize you're in that state. You have to analyze what's making this go like this. You have to realize the situation and then you have to react to it. Yesterday, thankfully, I didn't have any trades out, or else they would have, I'd said that, well, halfway through the day when they were at that resistance level, I said, okay, guys, I listened to the fat lady and she's singing, guys. So at that point, we just hung out there and slowly started to pop above that resistance, and then after hours, boom. So basically, I would have gotten short squeezed, and all of the bears they already got out way before I even said anything. So um, even though today, today is probably not going to be as accelerated in growth, I still do think, you know, we do have to go up, and we have to continue to go up, or else, uh, you know, we're not going to complete any patterns, and this would be a wasted move here. Now I kind of see that that this move already came down on the CCI. On a 4 hour, no. No. That's not good for the Bulls. Oh, well, you know why? It's because fucking after hours, guys. We're not running into after hours. So, I kind of do expect things to get choppy and for us to have an accelerated growth, but I don't know. When things go up like this, they usually go right back down. So, it's not that Jesus. Um this is strange because usually on a 4 hour, guys, look here. It's usually very choppy. Let's look at these examples. So these tell us that, we have an up movement that it catches, then this down movement. But we're still under this parabolic sober up movement, down movement. So if anything, we're likely to get a small down movement today. Small down, but we can't lose this support if we're going up. We can't lose this 61% support. We got to continue upwards, maybe even spike and then get the support here because, it's hard for the stocks to just find support right at the open. This is going to be an interesting morning. I mean, the only way for this to continue is if the bulls push it. But we got a big problem because we got economic indicators coming out today. We got GDP, we got uh, the chain deflator, employment cost, Chicago PMI, and Michigan sentiment. So all of these are very, 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 very heavy economic indicators that are going to tell us stuff. Now, what we ended up seeing in Europe was that the GDP was increasing, but at a slower pace than past quarters. And what's that really telling us is that the slowdowns are continuing, and that's also telling us that a tone for a hawkish voice is less likely. Here in the U.S., we're still hawkish, and traders are still worried about more interest rate hikes. I don't really see that as a big factor. What I really see is uh, is is business slowdowns. That's the major event that's taking place that we have tracked evidence of, um, including the business slowdown in the last report of the durable goods. Because, the durable goods order came out, but the only thing good on it was airplane orders. And what do we see? We see Starbucks in trouble. We see Subway closing stores. We see, we do see this economic slowdown, and you know, it's apparent, but it might not affect your life personally. But what that means is that if either these people are not going out and spending at um, your normal retailers, and they're going and buying everything on Amazon. That's possible, but you know, Amazon is a powerhouse. You really can't just expect all the growth to come from Amazon. It's going to kill the business. You have to have the whole economy prospering. You have to have this money flowing, this money velocity flowing. So we have to really look at what is going on, and we have been seeing a slowdown for quite some time, but it's not really a big sign. People say that all the retailers, like Macy's or whatever, closing stores and they're just focusing on online. Well, okay, maybe the online business attracts more as well, but people are spending less to the point where they're not even going out to these stores. Um, we're seeing that with Subway, with Starbucks. We're seeing that across the board. Um, People, do not, cannot spend this extra money, and when you start to have that chain reaction of people saving, that's going to cause a contraction in the market, and that's going to cause a deleveraging cycle. And when that deleveraging occurs, it's going to be bad news, friends. So we got some good things on the horizons, guys. So all of you out there who are afraid of a nuclear war with Korea, North Korea specifically, we have got some denuclearization on the way. We see Kim Jong Un and his Korean buddy over here shaking hands. You know, this is good steps, and I mean, yeah, okay, it may not come through, but it's um, it's definitely good steps in the right direction. And I'm surprised that this is even happening. But I wouldn't be so surprised because that's not the real war. Real war. The real war is for pipelines in Syria. That's the real war, guys. So, you know, be prepared for that to go down in the midst of an economic disaster, in the midst of false flags that could be worse than 9/11, or, you know, I don't know how they managed to do 9/11. That was the most tactful, tactful masterpiece of deception I've ever seen. You know, even if you take the skeptic's viewpoint and say the government didn't do it, well, the government had knowledge of it. You know, there was insider trading. There was, the papers in the Pentagon were destroyed that were leaving a paper trail of missings of billions of dollars, if not trillions. Also, you have that Jewish fella who took an insurance policy out the day the building went down. And on top of all this, you have um, sketchy office fires. Building 7. What were they keeping in Building 7 that they didn't want us to have? Because there's no reason for that building to go down, and and they won't release any of the footage showing the plane hitting the Pentagon. Do you know why? Because either it was a fucking Tomahawk missile or something. They just don't want to tell us what the real story was, and that's because it was a false flag. It was 100% a false flag. They did the TV shows to try and disprove that it's not whatever, a conspiracy theory, but it is a conspiracy theory. Well, it's a conspiracy, and a conspiracy is a plot of like one or more people planning against to hurt the nation. And now, not only did we have 9/11, but we had Bush, CIA intelligence officers, military advisors, all saying that we had intelligence that Saddam Hussein had weapons of mass destruction. And it's not that it's not that the people of the United States, you know, wanted war. It's that we, the people, like didn't have the facts. So it was so easy to mislead everybody because there was nothing to to back it. We just had, yeah, they got weapons of mass destruction. Yeah, all right. Like, come on, guys. What a sick joke. What a sick joke. So again, they're gonna. I don't know what they're gonna do. I don't know. Maybe they can't not fake something, but maybe they can't do something on American soil just because of the technology that's out there nowadays. Everyone's watching, everyone's got their phones out. I don't know if they could pull the wool over our eyes again. I think majority of young folk, majority of people who are self-aware, realize that oh wow, the Dow is down 112 points. That's more normal uh, than expected. That's actually fantastic for these to get a little haircut, 0.5% decline. That's actually perfect because then it'll rise back up. But anyway, yeah, look, we're almost at 100 baht. Perfect. That's how a normal like situation goes, not this extremely bit up pent up buying. But anyway, we have that situation where everyone is more aware of the deception that's going on. So it's likely that it's going this major false flag that's going to happen is going to go somewhere else. And whether it's they just fucking use CIA operatives and kill a bunch of people, or whatever the fucking case is, that they're using they're using the CIA, the FBI, the NSA. They're using that against us, folks. They're committing special operations against the people. And if you look at the economics, if you look at the politics, you could clearly see through the deception. And I think ultimately that's why I'm so bearish, and that's why This this market, this economy just gets me going. It gets my blood pumping because I see through everything, right through everything, and it really makes me a wiser, better person. But how does that translate into trading? Well, it's really hard because I'm so bearish that uh, it doesn't dilute my thinking. It just makes me, you know, I forget that it's rigged sometimes. And it's not that I forget that it's rigged sometimes. It's like I just, you know, I'm like, there's no way they could do it. There's no way they could do it. There's no way they could do it. And boom, they do it. And it's like, oh shit. And like, it's just not, you know, I forget when they fucking prop this shit up. Yeah, probably fucking here or something. I don't remember. You could look at my videos and I examined the oh no, it was the fucking direct direct pop-up we had after that humongous spike down. You know what I mean, guys? I'll show you on a daily. Oh, this isn't gonna show, it's the futures. Like, you know, we had this tremendous move down, 80 point down, and then back up. And I think that something had to happen. Something turned a switch at that point where we completely 180'd. And that's definitely changed the direction. It's at those critical moments, guys, where they change the direction. I don't know if the working group had a hand in that. I don't know if there was some moving average or what. I really don't know what caused that, so I really can't say it was the working group. But it was just too perfect, guys, to have happened. But anyway, um, I just want to cover. We're at a 17-minute video. This is jam-packed with good stuff. I'm pretty sure actually economic information is about to come out. Oh no, it's not. 8:30. Actually fantastic. This is a perfect time to wrap up this video and talk about, what is to come here. So what do we got? We got GDP advised, chain deflator, employment in Chicago. Yeah, that's at 8:30, and then 9:45 Chicago PMI, 10 o'clock Michigan sentiment. We are looking for that decrease. I swear we got an increase in sentiment somewhere else. That must have been last week. Oh, consumer confidence. We got an increase of 128. And I don't know where the fuck that's coming from. But the GDP measures, pretty much we're looking at consumer spending and businesses, because we did see a lag in durable good orders. A chain deflator, I'm not really sure what the chain deflator is. Let's look it up here. Oh, okay. So it's consumer prices, unlike the CPI, chain deflator changes. Okay, so we're just looking at uh, the amount of change in priced goods. Okay, the employment cost index, how much does it cost to employ people? So if it costs more to make a good than employ a person, they're going to fire the person or cut their hours or something. The Chicago PMI, that's producer. Oh no, that's the PPI is producer price index. What's PMI? Ah, I can't talk. Purchasing Managers Index determines the economic health of manufacturing sector. A reading above 50 indicates expansion. So so we are declining heavily from this 67 of 2017. We are slowly declining. We're at 57. The forecast was 62. Holy smokes. Well, what we're looking at is oh, here we go, April. I don't know why I'm. Wow. The forecast is 57.9. They're going to be off about 10 points, guys. No, I don't know. Um, but they're gonna be off. I can tell you that much. Let's see what happens. Okay, we could bounce back up actually. Nah, nah, because look, we've had declines, so let's take a lower number, 52. So we might get like a 52, guys. 52, 49. That's what I'm looking at. Um, Now let's look at some. Oh, wait. Okay. And then we know about sentiment. So let's go ahead and just check out what's going on in the market. So dollar is going wild. We got, let's look at the 10-year. Not trading at the moment, but this dollar is finding the resistance at 92 like I said it would. Actually, right at this fib line to be exact. I don't know. Is that a sign? I'm not really too sure, but we should get some resistance there. Now, look at here. It looks like we are going in for the decline unless we happen to, um, you know, just pull back to this simple moving average of 29.3, no, 29.28, 29.3 basically, which could happen, which we could bounce and continue higher, but because we've this bull run has just overbought and has been overbought and has just fondled along the CCI line. So it's very possible that we could continue this run up, especially that we've been in a like not record bond selling run, but that's what the yields are doing. They're rising, so that means that there's a big sell-off in bonds occurring. And whether it's China, Russia, U.S., we're all dumping these bonds in the market. And what do you guys expect? So let's just go ahead and like look at this. We see the CCI peaked out. We see the RSI into the overbought levels. So, you know, I'm really curious to whether it's going to break through. We could pop above it into the high 92s, but you know, we're already maxed out with that CCI. Once it looks like once we spike up, we definitely come down. So I'm assuming that this is going to be close to the end of the run. We might just stay here and try and break above it, but I suspect that we are nearing the end of the run unless this CCI comes down. But I think worldwide factors are contributing to that dollar increase. Great. I forgot to move myself back here. Um, yeah. Look, you see the CCI, two spiked off, RSI. All right. And then gold, silver. I don't even think you want to look at the chart. I mean, guys, it looks bad. We've been in a bear market for gold and silver. Well, I don't know about silver. Let's pull up silver. Silver's just flat, but we're in a triangle or pennant now. The 10-year, 2-year spread, I say we continue to rise. We continue to rise to that point, 56.58 level. Don't see us getting much above there, but once after this week goes and we start to really get that increase in bonds, perhaps bond yields, I perhaps think that this 10-year, 2-year spread is going to uh, flatten even more. Um, you know, what's driving these market? All right. Let's talk about why I got the markets wrong. Um, I got the markets wrong because I was just picking to a side, and that was the side I was sticking to. I was warning you guys. The bulls were on there were most people were going on the other side of the trade, and that is why it didn't really work out to the best of you know my trading abilities. But as of now, we've spiked up to critical levels here. We've spiked up right around here, right in the goody of this gap up. So, of this gap up as well. So, are we going to keep continuing higher? We probably spiked out a good amount. I'm not really sure, guys. This was this is similar to the, and we're not even look, we're only one like zero point 0.1 positive, but again, this would have been bad, but we had Amazon earnings that skyrocketed the indices, and so Intel got some bids too. Um, but what I really see here is this continuation up, and this made a higher high. We had a stronger move here than we did at this run. I don't want to say this, but I kind of suspect a weaker move because this move was so strong. If we have a weaker move, that's very, 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 very bearish. And it also depends on this economic data that comes out. So with all that being said, we got a 25-minute video in here, packed with information, packed with trends, packed with knowledge of markets, geopolitics, economics. You know, I'm sorry that I had parabolic paralysis yesterday. I couldn't even bear to make a video. It was absolutely the paralysis developed for sure. Um, especially into that after hours. I had no idea what was going to happen. I just needed to walk away and reset. But after all, I don't think there's going to be much of a second move. I think it's just going to be a bounce and a minor bounce. I think it will be. So on that bombshell, I'm going to leave you guys off. Thank you very much for watching. I'll post another video at probably 9 o'clock going over um, the GDP, chain deflator, and economic cost index. Thank you very much. See you later.